everyone, welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the equity market spared the initial gains yesterday after witnessing resistance at higher levels and snapping the 3 days of winning streak. We did see the benchmark indices also end lower. Now, as we move into the new trading session, we will focus on stocks like Dixon Technologies, Mankind Pharma, Titagarh Rail, IEX and even NLC India that will react to their earnings, while on the other hand, M&M will be with the last few nifty names that will be reporting the results today. So that will be in focus along with other broader market names like Biocon, Crompton Consumer, even JK Paper, Kim's, HAL and Solar Industries and Motherson Sumi Wiring. These will be the stocks that we'll keep an eye out on. The question is, will the Nifty be able to bounce back on the weekly expiry day? We will find that out over the next 90 minutes in our discussion with top market experts. Welcome and good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. It's a bright Thursday morning as far as markets are concerned, and Sakshi has a piece of advice and a hope that in the month of May we will see a record high on Indian markets. So as I have been telling you since last Friday, please tighten your seat belts. We've shut shop at 22,200 yesterday. A new high on the Nifty would mean another 600-point run up, and all indications, at least to what I can see, are there in place that we'll have a record high beyond 22,800 as far as the Nifty is concerned, ladies and gentlemen. Now let's try and analyze why. As usual, we'll start with the daily Nifty chart, and I have a lot of interesting data to share with you as far as markets are concerned. Sakshi will brief us on what's happened on Wall Street, but I'll just give you a hint that all is fine. There is a record high on the Dow Index, there is a record high on the Nasdaq, and Sakshi, not one but two rate cuts will happen between now and December 31st as far as the US markets are concerned. Now let's start with the chart of the Nifty. I believe this is the Dow chart in front of you. The Nifty's chart is there, and ladies and gentlemen, after a gap up yesterday, the Nifty was unable to sustain the gap up and ended about 17 points lower. Nothing to be worried about. 22,200 was held by the bulls, and that is a very strong sign that things will move and improve better and better. Now let's look at the cues. GIFT Nifty is pointing to a decent uptick. If the markets move above, if the index moves about 50-70 points higher, then it will overcome the cluster of short-term moving averages that are bothering it as of now. Now, as far as the Nifty is concerned, ladies and gentlemen, yesterday it faced a resistance at 22,300, which also happens to be the 20-day moving average for the index. Now 50 and 100 are with the bulls, which is a very strong feeling. 21 is what is creating a hurdle, and remember, 21 decides whether you buy on the dip or you sell on the rise. So if you are above 21, you buy the dip, and if you are below 21, you sell the rise. So today's battle, which is on the weekly expiry day of the Nifty, will be on 21 EMA, and all indications are that you will have a very strong start. Let's hope whether the bulls are able to capitalize on that very well, and then we'll see a strong move. Sakshi, yesterday mid caps, small caps and the NSE 500 ended in the green. That means the broader market is in fine shape, and we've discussed many stocks which do that. Now let's look at the good points on the Nifty. You'll talk about Wall Street. Let me talk about the US 10-year yield. It's the lowest since 5th of April and is down for the third day. Let's look at the dollar index, down for the fourth day and below 200-day exponential moving average. And Sakshi, the most critical thing today will be how the windfall tax beneficiaries work out. Remember, the government has cut windfall tax on OMCs and on ONGC. So we'll keep an eye out on all these counters, BPCL, HPCL and ONGC. Let us see how they work. Now let's look at the other positives as far as market is concerned. So you have muted crude, muted US 10-year yield and muted dollar index. It is all positive for Indian markets. On top of it, you have a gap up on the GIFT Nifty and the fact that there are expectations that you will have rate cuts on Wall Street. So this is how the market is structured for today. FIIs are short. They'll be getting into that short covering mode on weekly expiry day. Let's see what happens. Earnings today are from Hindustan Aeronautics, CCRI, which is Container Corporation of India, and M&M, as Sakshi pointed out. I think one of the last laggards as far as Nifty is concerned, but a fabulous stock. If you have it, don't exit it. We'll be looking at earnings as of now. Reaction to earnings will be coming in from Dixon, LIC Housing Finance, and Berger Paints. Profit in Dixon is up 25%. Berger, the profit is up 20%. Margin has slipped. LIC Housing Finance, profit is down. The two stocks in cash segment that will give fantastic reaction to earnings is Mankind Pharma and Titagarh. Sakshi, blowout numbers. Fourth quarter profit for Mankind is up 65% and Titagarh is up 64%. So these are the details that Sakshi will give you. But two stocks you have to keep in mind: Bharti Airtel and Cipla. The charts are there in front of you. Bharti's con call yesterday was fantastic. There is talk of a further look at the guidance 3, 4, 5 months later. And of course, additional capex is slowing, and the fact that overall capex is moderate, which essentially means that there will be some free float as far as cash flows are concerned. So look at Bharti. And Sakshi, Cipla. Yesterday, the pharma major, the promoters sold a minor 2.5% stake in the company, and every single major fund, every single major investor has participated. So Cipla and Bharti is what we are going to discuss with our analysts and amongst ourselves as well. Sakshi.
So let's start off with the global cues now. So overnight we did see the S&P 500 and the Nasdaq closing in at record high levels, and of course with the former crossing the mark of 5,300, and this is for the first time, and this is after the consumer price index has risen 0.3% for the month of April as compared to the estimates of a 4.4% increase as well. So all the three indices, the Dow Jones, the S&P 500 and the Nasdaq, they ended sharply higher after the yesterday's trading action. Over a percent uptick can be seen on all of these three. Let's talk about the Asian markets now. The Asia Pacific markets also rose on the risk on sentiment after the US inflation data assured market participants that the Federal Reserve is likely to ease the monetary conditions pretty soon, and we did see all across the board a green sign. So Hang Seng was the one that was moving the sharpest, over a percent higher, almost 0.6% kind of an increase being seen on the Nikkei 225, Kospi up by 0.7% and the Shanghai up by 0.25% as well. Following this, we've also seen that the Gift Nifty is also indicating a strong start for the Indian markets, trading at a premium of 100 points as of now, right now. Now, when we talk about the flows, remember the foreign institutions have continued to remain net sellers in the cash market, even yesterday, taking the total sell figure in the last 7 trading sessions to the past 30,000 odd crore rupees mark. Remember, they sold about 2,832 odd crore rupees yesterday. DIIs, on the other hand, they bought 3,788 crore rupees of stocks in yesterday's trade, so they continued to remain net buyers as of now. Now, let's talk about the key stocks that you need to keep an eye out on. On the earnings front, Dixon Technologies, here the consolidated year-on-year figures show that the revenue was up 52% at 4,658 crores, and EBITDA has risen by 19.2% at 243 crores. The margins, however, have ebbed a little from 6.7% to 5.2%, although this is higher than the estimates that the street were posting of about 4%. So higher than estimate margins for sure. Net profit is up by 20.7% here to the tune of 97 odd crore rupees. Mankind Pharma Q4 consolidated year-on-year numbers show that revenue is up 19% to 2,441 crores. EBITDA here has sharply risen by 42.5% at 591 crores. Even margins have expanded by 400 basis points to 24.2%, and the net profit is up by 62.3% at 477 crores. This is versus 294 crore rupees recorded in the year ago period in the same quarter. Berger Paints will also be reacting to its numbers. Q4 consolidated numbers show revenue uptick of 3% at 2520 odd crore rupees. EBITDA, however, was down 4.8% at 351 crores. Margins were at 13.9%, again below the last year's number of 15.1%, and the net profit was just up 20% at 223 odd crore rupees. So pressure clearly there. Pre-call has reported its numbers. So Q4 FY24 consolidated year-on-year numbers show that revenue was up by 11.6% at 584 odd crore rupees. The net profit was up 39.3% at 42 crore rupees as well. So that's a strong number. Titagarh Rail Systems, I'm keeping an eye. Q4 FY24 numbers on a consolidated year-on-year numbers show revenue uptick of 8% at 1052 crores. Margins at 11.4% that have improved from 9.8% earlier, and net profit substantially higher, 63.7% higher at 79 crore rupees versus 48 crore rupees that was reported in the last year same quarter. MOIL has also reported its numbers in Q4 on a year-on-year basis. Revenue is down by 3% at 416 crores. Profit, however, is up by 12.6% at 91 crores versus 81 crores. IEX, another number that I'll watch out for. Consolidated year-on-year basis, we've seen the revenue up by 13.3% at 121 crores versus 107 odd crore rupees. Now, net profit is also increased by 9.5% at 97 odd crore rupees right here. The last one that I'm watching is LIC Housing Finance. Here the standalone year-on-year numbers show total income up by 8.1% at 6,937 crores, and the net profit, however, saw a decline of 7.6% at 1,091 odd crore rupees. So these are the stocks that I'm keeping on my watch list today, Shail. Okay, so what we'll do is we'll also look at the key brokerage houses reports that have come in as well. So as far as the CLSA report on PFC is concerned, remember the earnings came in yesterday. After the earnings, CLSA has given a buy call with a target price of 580 rupees on PFC. They do believe that the company trades at a 33% discount to REC, although the company also lowered its provisions on the discoms, taking the advantage of its rating improvement, and therefore they continue to believe positively on this one. Jefferies, on the other hand, has come out with a report on Adani Ports with a buy rating and a target price of 1640. They also guide that the company has guided for a 5 years of double-digit growth, and the company is also targeting an 18% EBITDA CAGR from FY24 to FY29 estimated earnings, with a share of logistics moving to 10% from the current 3% as well. Also, the ports EBITDA is expected to rise by 16% on a CAGR basis, and logistics potential is a sweetener for the company going forward from here. So positive reports coming in. Already in the last 1 week, we've seen Adani Ports really move up sharply, about 7.5% odd or so, and there could be a further surge that we can expect on this one. The next one that I'm looking at is Dixon Technologies. Remember, I read out the earnings as well. After those earnings, we've seen there are two divergent reports that have come in. So it will be interesting to really understand from our guests today as to what will be the future course for Dixon Technologies. In the last 1 week, the stock has been subdued, but Goldman Sachs has clearly given a sell rating with a sharp downtick in the target price of 5,910. Remember, the stock is trading at 8,100, and they believe that Q4 EBITDA was up 17% year-on-year, flattish on a Q-on-Q basis, and it was below Goldman Sachs estimates. Now, what they say is that mobile ramp up has actually not begun fully in Q4, and even lighting and consumer electronics have come in weaker from here, and markets are keenly watching up for the ramp ups in all segments, particularly the mobiles. On the other hand, there is a very bullish report on Dixon Technologies as well from CLSA, which has given an outperform rating, a target price that has risen to 9,000 rupees. They do believe that Q4 was slightly below estimates, but definitely company's EPS could more than treble in the next 3 years, helped by a 40% plus revenue CAGR on the back of strong mobile segment ramp up, and smartphone shipments, even excluding Samsung, are guided at 28 or 30 million units in FY25 versus 6.5 million units in FY24. So those are some of the brokerage houses reports that I'm keeping an eye out on. Let's also welcome Shail back on the show. Shail, what else are you watching out for?
Well, Sakshi, I have ordered a new seat belt, and this is a time to sort of also look at the most underperforming sector in the Indian markets. I'll request the PCR to fire the long-term chart of the Nifty IT index, followed by the Nasdaq. Both charts are somehow needed to be correlated. The IT index, Sakshi, has been the worst performer. If you look at the long-term chart, this is the daily chart. If you look at the long-term chart of the Nifty IT index, you will see about a 10, 12, 15% decline from its most recent high, and the fact that the Nasdaq is at a record high. The commentary in the market is now bullish as far as the US Federal Reserve's stance on interest rates is concerned. If interest rates in the US are cut, it would be beneficial for domestic IT companies, and it is for this reason, ladies and gentlemen, we will be discussing two very good IT funds and one very good IT ETF in the 2:30 to 3:30 show today. So please do join us. If you have some engagement, try and cancel that. This is a time to make supernormal money in IT by doing a very simple thing, buying either a concentrated IT portfolio via equity diversified fund or just buying the IT ETF. So we'll be keeping an eye out on this one. Remember, the Nasdaq is at a record high, and for those who have been following me for a very long time, I have been advocating the purchase of Motilal Oswal Nasdaq 100 ETF at about 144 rupees, 145 rupees, and which is now at 144, 145 rupees. Remember, this is a 10-for-1 split. And also the Mafang ETF, which is the Mirai Asset FANG NYSE ETF, which has done phenomenally well. 7 months ago it was 1 year ago it was at 33 rupees. It is now at 95 rupees. So we'll be discussing, Sakshi, the IT space at 2:50 p.m. today on Market Today.
Okay, got that. And like Shail was pointing out, Bharti Airtel he's keeping an eye out on. We do have another brokerage house report also on Bharti Airtel. Remember, after the earnings came in yesterday, there's a JP Morgan report on this one. It's upgraded the stock to an overweight rating with a target price that they believe at 1500 for Bharti Airtel. Again, what are they saying is that there is indeed a lack of 5G monetization and also slowing share of gains, but it is likely to encourage the industry price setters to continue to support biannual tariff repair cycle pretty soon. There are several reports that have also come in before that right after the elections we could see at least a 25 percent kind of hike as far as the tariffs are concerned. So we are going to be looking at the stock again today. Now, apart from this, we're also keeping an eye out on several other stocks like I pointed out. So PFC is another one which is on the top radar of CLSA, a buy rating right here, the target price of 580 rupees. Again, CLSA believes because it is trading at a 33% discount to REC, CLSA is betting big on this one. And the company has lowered its provisions on discoms, taking the advantage of its rating improvement. And the other one is Adani Ports, where Jefferies is positive with a buy rating and a target price of 1640. Here the company is guided for a 5-year of double-digit growth, and the company is targeting an 18% EBITDA CAGR over the next 4 years, with the share of logistics moving to 10% from 3% currently. So these are the 3 stocks which are on top radar of brokerage houses as well.
Sakshi, what we'll do is we'll request the PCR to fire a long-term chart of Cipla, and the reason why I wish to point this out is twofold. Of course, there were talks about last year that the current management led by Dr. Y.K. Hamid wants to sort of exit Cipla, and there was some conversation that happened with Torrent Pharma. Those valuations did not fructify. So minor stake sales happened yesterday, and I'm trying to get you the list of the buyers that have stepped in as far as Cipla is concerned, and you will not believe that the world's premier fund managers and very, very large investors have come in as far as taking a stake is concerned. Yesterday's block deal window, you will be surprised, had 1 full page on Cipla, and I'll now tell you the names that have come in. Let's start with the big ones. There is Value Quest Investment Advisors. There are pension funds from Norway. Goldman Sachs' India portfolio has bought 6.5 lakh shares of Cipla. There is the emerging markets equity fund from the brand name is Jupiter. There is T Corp IM that has bought in. The Saudi Central Bank, Sakshi, has bought in 9.5 lakh shares of Cipla, and there is the likes of mutual funds. I can't even start with the list. There is Mirai Asset, there is Morgan Stanley Asia Singapore, there is ICICI Pru Mutual Fund and ICICI Pru Life Insurance. There is IBM Diversified Global Equity Fund, and there is HDFC Fund that has also purchased Cipla, additional Cipla 5.5 lakh shares. Government of Singapore, Gisalo Master Fund from the US, and of course the Brunei Emerging Markets, the sovereign fund there. Let me tell you who's the biggest buyer. That will be a little difficult to say, but I would imagine it would be DSP Mutual Fund, 9.93 lakh shares. And actually it's Aditya Birla Sun Life Mutual Fund, my apologies, 22 lakh shares they've purchased in Cipla. So that's the biggest buyer yesterday. And 2 points I also want to mention. Yesterday a company called Aadhar Housing was listed. Two large block deals have happened by one very large ultra Chennai, Mr. Akash Bhansali, and the other by Blue Diamond Properties Private Limited, both about 22 and 23 lakh shares respectively. Sakshi.
Okay, and there's another news also with respect to Cipla that came in yesterday, that Cipla has signed a definitive agreement for further investment of up to 26 crores in optionally convertible preferential shares in Akira Labs, an associate company, in 4 tranches. The transaction is subject to completion of certain milestones, which is what the company has said, and Akira is engaged in development and commercialization of point of care medical kits in India. Remember earlier also we've seen that since Cipla's previous investment in June of 2022 that we've seen in Akira, the company has made significant developments in the product development and R&D space as well, and pursuant to the completion of the first tranche of investment, Cipla is holding about 27.27% of the total voting rights in Akira as well. So we are going to be keeping a keen eye out on these continuous acquisitions of stakes in various companies that Cipla is also continuing to make, even as its own firm is undergoing a big stake sale from the promoter firm as well. Apart from this, let's also keep an eye out on what's extremely important, what Shail also mentioned. India has slashed the windfall tax to 5,700 rupees per ton effective May 16. This is from 8,400 rupees per ton that was seen earlier. This is the export duty on petrol, diesel and the aviation turbine fuel that will continue to be nil. So they are not impacted, but the new rates will be effective from today. And the CBIC has notified this as of late night, last night. This okay, and on May 1st, the centre has revised the windfall tax on domestically produced crude oil to 8,400 rupees per ton, down from 9,600 rupees per ton. So it is constantly getting slashed, and now it is to about 5,700 rupees per ton effective from today. Right, we also have our guest with us right now. Devin Choksi has joined in. He's the MD at DR Choksi FinServ. Warm welcome to you, Devin sir, and thank you so much for taking the time out. Do tell us what is your view on the market, sir? We've been seeing consistent volatility over the last 10-12 days. We've been understanding from various experts on what is the kind of impact from elections that we are seeing on the markets as well. What are you at? Are you now feeling more confident about the BJP victory and therefore a strong run up in the markets?
Good morning. Well, I think we are not talking about the BJP victory at a point of time. Because I think I quizzed, I think, somebody other day, and I asked them that I think who is there in opposition. I think please write down 100 names. I think who can win seats, and I think they struggle to I think even provide that list to me. So frankly, I think today that is a situation. On one side, we have got Prime Minister Narendra Modi, who is fighting for BJP, and on the other side, I think all scattered candidates in the Lok Sabha, I think, who are probably not having recognition. So I think that's an unfortunate scenario at the same time that you don't have the strong opposition at this point of time. But leave that aside for a while. the market is definitely aware about this situation, and I don't think that the market is getting any way affected with the numbers which keeps coming and going out from this place. Overall, I think the last week the situation was quite tricky because you had a situation of one of the large hedge fund, basically the fund manager of the large hedge fund, whose position had to be squared up, and the long in the PSUs and the PSBs and the short in the FMCG had to be squared up. So we saw the trade going in that direction, wherein most of the FMCG consumers, I think, went up and the PSB PSUs fell. This week, I think that situation lasted for almost, I think, Monday, Tuesday, Wednesday kind of the situation last week. Probably thereafter, the mark-to-market pressure came in onto the trader in their position, and that also caused the fall element, I think, which also we observed during the last week's behavior of the market, uh, that the finance ministry and the SEBI are very clear about bringing some stricter regulations on the derivative markets, which also caused some amount of panic in the minds of those people who had long positions. I think probably they get the wind out of what announcement finance minister made yesterday. So I guess I think all in all put together, the last week was a cause for the major fall. This week again, I think the market has stabilized, and fortunately, the liquidity part is supporting the market. So most of the funds who are willing buyers at the fall, they were actually active in this week beginning itself. And today we are also seeing the same situation continuing in select stocks. So overall, market is moving in a trading zone. You can't be summarizing beyond the point. Neither can you be simplifying beyond the point. It remains as complex, and I think probably it's a nightmare for the traders who are actually trading this market. Only for investors who want to buy at lower levels, for them this market gives a lot of opportunities.
Right. Namaste, Devan Bhai, and I'm sure you would have taken yesterday's opportunity to meet Mr. Modi in Mumbai. He was around your area only in Ghatkopar and Andheri. I checked that online. The other point I wanted to check, Devan Bhai, is that you would not have missed this opportunity last week to not purchase some quality assets for your clients and for your own PMS portfolio. Any one or two names that you can share? And as always, it's such a pleasure to have you.
Yeah, Shail, thank you so much. It is equally a pleasure of mine, I think, to be in the show. Uh, well, I didn't get the opportunity to meet Prime Minister yesterday, but could see, I think, him extremely busy with the rally that gets conducted, and maybe I think surrounded by so many people out there. Uh, on the other side, the market gave opportunity. We ended up buying, I think, some of the good quality names which we always like to have in the portfolio. Market gave opportunity in companies like GeoFin, market gave opportunity in companies like Bajaj Finance, Bajaj Finserv. They continue to give that opportunity. We ended up picking up Kotak Bank. So I think our approach has been extremely selective about buying into some of the quality names where we believe the fundamentals remain absolutely strong and the market technicals are actually the cause of the fall in the stock prices of some of these companies. Probably that is an opportunity to buy. And we always tell even to our investors, including in our PMS fund, that this market, which is priced to perfection, and I think is showing extraordinary amount of exuberance due to the liquidity push, you will have to buy when the market gives you an opportunity at lower levels. And that's where I think your strategy will work. As such, if you want to make 20-25% kind of a steady return from this market, not to get into momentum part of, then probably the opportunities that you will have to seek would be the time when market gives you one in the fall, or unnatural reasons for technical reasons. That's where I think we are keen to, I think, add further into portfolio. In fact, I think we kept some amount of cash in the hand, largely because of the fact that I think if the election times, if at all any kind of untoward move happens in the market, probably I think that is a buy opportunity that one can have. So yes, I think we believe that I think this is the time to buy some of the good quality names which are given opportunities. Yeah.
Okay. Devan Bhai, just allow me 30 seconds. Let me get pre-open out of the way, and then I have a very important question for you. The three names that I could make out is Reliance Jio, that Devan Bhai used this dip to purchase, Kotak Mahindra Bank and Bajaj Finance. Now let's look at the market, ladies and gentlemen. We have a gap up about 79 to 90 points, just as the bank just as the gift nifty was suggesting. So 22,250, let's just go ballpark. 22,250, 270 is with the bulls. Now what is propelling this? I want to see what HDFC Bank is doing. 2 rupees higher, 1440. How about Reliance? 1 rupee 50 down. I just want to see Infosys. Okay, 9 rupees higher at 1429. We'll just look at the rates a little later. It's rare to get Devan Bhai with us, and we just need that opportunity. IEX is opening 10% higher. What else is moving strongly? Dixon is 10% lower. NLC is 4% lower. Okay, we'll do this daily, but it's time to speak to Devan Bhai. Devan Bhai, two important questions. The blowout that is happening in the capital goods space. The reason why I ask you this is that as a brokerage house over the last 5 decades, you have tracked companies like ABB, Siemens, Thermax is a recent vintage, but you know the entire Kirloskar group, Pneumatic, Kirloskar Brothers, Kirloskar Oil Engines, the Bharat Bijlis of the world, the Hitachi Energies of the world, blowout numbers and blowout stock prices. What is happening in this space, and what would be your top pick?
Yeah, Shail. I think not very surprising to us, frankly speaking, if you ask me. We have been the buyers in this particular capital goods segments from as early as I think 2020-21 onwards, largely because of the fact when the government laid down the blueprint for infrastructure spending of 110 lakh crores, then announced in 2020 and 21. We thought that I think it's a proper buy opportunity to some of the long-term investment counters like EBB, Siemens, even for that matter, I think the companies like Larsen, where we believed that I think in BML, of course, so we believed that I think there are opportunities in these pockets because of the government spending increasing on this front in 10 years time. Today, that 110 lakh crore budget has moved to 142 lakh crores by 2030 spending that the government wants to do. And not completely surprising because each and every user verticals of these companies have been showing remarkable amount of investment appetite, be it in the power generation, be it in the power distribution, be it oil and gas refinery segment, where the likes of EBB and all are already present. We believe that I think this is more of a directional call than to look at anything from a quarterly numbers or something to look at it only from yearly numbers. ABB in those days were available at around between 550 to 750. And I think we said that even if the stock is a little bit expensive, it is worth buying it because directionally it is taking a long-term uptrend now. Today, I think that stock is 10 times, 11 times in a span of around 4 years, 5 years. We are lucky to an extent, but I think it was more of a directional call that we took, and we continue to believe that there is a deep value investing proposition here because I think next 5 to 10 years are looking brilliant for these companies as far as I think the business outlook is concerned. In fact, ABB kind of company would probably end up producing results which they have never produced in India up till now in whatever period of time since they are in the Indian market. So this is the kind of time that we are seeing for this companies.
Right, Mr. Choksi, so that's the big view coming in on the capital goods space, and you've already suggested some stocks from the banking and the finance space for all our viewers. Towards the end of the earnings season, what has really stood out for you, sir, and what clearly disappointed you in this set of Q4 earnings this time?
Actually, honestly speaking, there is nothing which is called disappointment at this point of time. I think more or less when we saw that the muted numbers are likely to come from IT, this is validated. There is nothing which is called negative surprise as far as I think the earning numbers are concerned. On the contrary, we believe that most of the companies are today giving the transparency so much that you don't get a chance to have a negative surprises in the numbers. Overall, we are positive about the entire space in the economy from the growth perspective that is called consumer, discretionary and non-discretionary both. Is a very convincing space, I think, which we find, and that got validated. Look at the building material segment of companies. Look at the numbers which are relatively steadier to better in the case of companies like Asian, companies like Polycab, even the piping division where I think the Supreme Industries kind of company is reporting such a large number of growth. So we believe that more or less these companies have validated the directions which we have probably observed in them, and that is where probably the investment is best rewarded. I believe that I think even the corporate banking space, in spite of rise in the interest rates and I think some pressure on NIM, they have been able to show relatively better performance. At the same time, the non-performing asset component in the balance sheet, including of SBI, has been significantly lower. So these are some of the positive takeaways that we see in this particular business. In fact, I think the auto companies have actually, I think, shown a very different kind of a picture, which is promising to do, I think, little better than what they've done up till now. So we are relatively more positive about the possibilities going forward. Maybe on a higher base, you might not see the same level of growth, but I think the sustainability and continuity of growth will be experienced in some of the quality franchises that we are talking.
Okay. So also, since you're talking about consumer discretionary space, I also wanted to ask you on the FMCG space. We did see the earnings come through for most of them now. The large caps and the companies' managements are now talking about some signs of recovery in the rural demand, and then there is this promising outlook as far as IMD is concerned, also on the monsoons front as well. How are you really looking at some of these stocks from the FMCG basket, sir?
So when it comes to rural demand, I think what better indicator than the GST collection of 2,10,000 crore month, I think in the month of. Honestly speaking, I think the tier 2, tier 3 and beyond, the amount of purchasing power which is getting added in the hands of consumer is seen never before, if you ask me. I think it is beginning because as the size of the economy grows from 4.5 trillion dollar to 10, 12 trillion dollar in the next 8, 10 years time, I believe that I think the consumer is only going to have more amount of money to spend, and that's going to only provide the larger amount of thrust to the FMCG companies in particular. In those companies where they have basically been able to systematically do proper background work in order to capture the large size bull market, and that is what I have to say. The management of supply chain logistics for the rural area, and most importantly, I think predictive demand by use of AI. Likes of HUL, I think you probably today find that they are deploying AI for the management of demand generation in the rural area. So that gives them an advantage on two front. One, where I think the demand is there, they can supply the product, of course, by do a proper production planning. The most important part is I think you produce those products I think which are in demand. So you never have the larger stock, and that way you save the working capital and you also save the cost of working capital. So on one side, I think it's a market demand which they cater to. On the other side, they take care of the balance sheet by way of managing the finance and other resources well. I feel that I think they are such companies which are using the AI to this kind of advantage. They should be relatively better placed going forward, likes of Britannia, likes of Nestle, likes of HUL. We find that I think they are relatively better equipped now than ever before, as far as I think taking the advantage of higher purchasing power is concerned from the rural markets.
Right. David bhai, the other point of discussion these days is, of course, whether in calendar 2024 will we see a rate cut in the US economy and therefore ours as well. Given the data that's come in yesterday, hopes have risen. Now, is this a time to get into Lagarde IT sector? Given the fact that a rate cut possibly in the US helps domestic IT companies, the Nasdaq there is already at a record high. How do you see the prospects of these beaten down counters such as Infosys, such as Coforge, Emphasis, to some extent a lot of mid cap IT like KPIT, Birla Soft? What is your view and how are you playing this theme?
Very important point, Shail, and I would think that valuations are to the advantage of the investors today in IT counters. All said and done, despite of future growth, they have the business to execute, and that is what is fundamentally more important. However, as I observe, I think the business model is shifting from yesteryears where you were providing the codes and I think the softwares were running in the background at the enterprise level. The move has happened wherein the shift has dramatically started happening in the area of computing, in the area of artificial intelligence, in the area of machine learning, in the area of large learning processes. So all I believe is basically moving fast in the direction of computing. And those companies which are apart from providing the software solutions to the end customer, those companies which are working in the direction of software as a service, as a business model, they would probably, I think, be relatively better off. I'm yet to see a similar kind of situation occurred from the likes of Infosys and TCS, but do believe that I think they are working very hard on this particular front, wherein they are working on the models where the platform service providers they would be. So in a given situation like that, they are likely to recreate themselves in subsequent years of time. Maybe it will be slightly slow process because of their size. So in that kind of a situation, the mid-tier IT space looks relatively more assuring and relatively more clear from the earning perspective. And that is where your likes of LTTS, LTIM, Science Technology, uh, even for that matter, PPIT, those are some of the companies which are looking relatively more safer because they are in the engineering R&D space. They are having the larger amount of niche play in respective verticals in which they operate, including the likes of Tata Elxsi, where they have different verticals where they are operating, and each of them have got, I think, its own niche where this company is getting, I think, the repeat orders also larger size orders from the customer. So in my viewpoint, I think some of the niche plays I think will have to be selected in your portfolio from investment in the IT space.
Okay. Then, very quickly, you mentioned three large caps that you've dipped into as far as last week's downturn was concerned. Anything in the mid cap and the small cap fall that caught your attention and you caged it in your portfolio?
So we have not added anything in particular in the last week, but the company which we have liked and we have been early entered into that. One is a Pravik Limited, which is in the business of leisure tourism as well as in the spiritual tourism area. This year, as we learned, I think they should be completing the 25 sites where they would be having either the tent-based room or the resorts for the leisure travelers, and close to around 500 rooms, I think that they would be having. We believe that I think with the current average room rate of around 9 to 10,000 per night, I believe that I think this company with about 500 rooms capacity that they are building in the current year should be reaping the full benefit somewhere in 25, 26 and beyond. So yeah, any situation in the market which allows you to buy the stock at a relatively cheaper level than what it is currently traded may be a good buy opportunity to this kind of
Right, sir.
company where investment looks, I think, pretty stable.
Right. Ladies and gentlemen, we have the market with us. 91 points higher on the Nifty, 22,290 for you. The Bank Nifty is opened 230 points higher, 47,928. The IT index is nearly a percent higher. We need to watch this one, 33,406, and the 500 has opened about 0.5% higher. The good part is that all 10 index heavyweights are in the green. Let's start with HDFC Bank, 10 rupees higher, 1448. Let's look at Reliance, 2 rupees higher, 2835. I want to see what Infosys is doing. 14 rupees higher, 14.3. How about TCS, 17 rupees higher at 3893. How about the two corporate banks? Axis Bank is flat, 1130. ICICI Bank is up 8 rupees, 1132. SBI 823, 2.8% higher. Tick of green on Bajaj Finance and Tata Motors. Okay, let's look at the earnings reaction. Absolutely flat on Dixon Technologies, 81.28. Let's look at the top gainers here. Apollo Tyres, remember the earnings were muted day before yesterday, 5.8% higher. This is the top gainer in FNO, 503. Indian Energy Exchange, earnings led 3.5% higher, 150. What else is moving? Bharti Airtel 1.5% higher, 1328. We'll do very quickly to NSE 500 and then get back to Devan Bhai. Titagarh blowout 6% higher, 1185. The market is appreciating a rise of 160 basis points in fourth quarter margin and a 64% burst in fourth quarter profit. Mankind Pharma 2% higher. Earnings led 2234. We'll discuss the numbers a little later. What else is up? Timken India 2% higher, 4074. Natco Pharma 2.2% higher, 1004. The Nifty is now 86 points higher. We'll do a very quick detour into the broader market and then get back to Devan Bhai. All 19 of indices are in the green, ladies and gentlemen. मैं आपको कह रहा हूँ कुर्सी की पेटी बांध लीजिए. This week or next 10 days we are going to see a record high in the markets. Advanced decline ratios very strong. 1600 shares in the green, 270 in the red. Which is the top performing index? It's the IT index, like I had mentioned, 1% higher, 33,467. What's taking it away? Defense is moving. Masgaon Dock 2423. LIC Housing Finance post results 643. Devan Bhai's pick Kotak Bank a third of a percent higher. Dixon on the move, now a percent up. This is what I have observed. Devan Bhai, anything that is catching your fancy?
Well, I don't know. I think whether I would be immediately participating into momentum, but my take is that I think given the strength of fundamentals and the possibility of unlocking of the valuation in next 2 years' time, likes of Adani Enterprise could be, I think, a better choice to get into the portfolio. The stock is reasonably priced, as I would call it at this point of time. But given the possibility of airport business unfolding, or even for that matter, road business unfolding, or even for that matter, renewable business, which is new energy industry, which they are incubating in Adani Enterprise, I feel, and even the data center, I feel each of these big pieces, I think which they are incubating in the business portfolio of Adani Enterprise, they hold the potential to unlock the value for investors in next 2 years' time. And given that possibility, I would think that I think what it's time to probably, I think, buy during the dips in this kind of a counter and stay invested for at least 2 years and above. That is where I would put my eyes on at this point of time.
Okay, Devin sir, the only question that I have, sir, okay, just one last question and before we let you go, and that is on the recently listed stocks yesterday, Aadhar Housing, TBO Tech, and this Go Digit Insurance that's also underway. Anything that you're keeping an eye out on? Anything looks promising to you?
So other housing looks, I think, reasonably promising because I think their focus remains on the low-cost housing segment, where the coupon size is comparatively smaller, and at the same time, I think the amount of the ability to build the book would be on a higher side because of the fact that the government is pushing this particular area of activity to a much larger scale. So we believe that I think this company holds the potential to scale up and scale up very systematically. Once they are listed and I think they get the access to public money, I would think that I think they would be in a better position to build their book from the small housing to mid-tier housing segment, where I think probably profitability can be slightly better. So from that perspective, I think this company also looks relatively more stable. In fact, I think we like the housing finance space and we keep an eye on Bajaj Finance, where they've built the Bajaj Housing Finance as a subsidiary. At some point of time, that company is also likely to unlock its value in the marketplace, and that's where we keep our eyes on from the investment.
All right. Well, thank you so much, sir, for sparing all that time with us, and truly appreciate your presence on Market Today and on Business Today Television, and for your wonderful insights. Getting back to the markets in the F&O space, what's buzzing is Metropolis Healthcare. Sharp rally right there in the initial minutes. 13.5% higher. It's the top mover right now. Very strong move coming in on Metropolis Healthcare in the F&O space. Apart from this, of course, Apollo Tyres has been highlighted by Shell. There are brokerage houses reports that are positive on this one. Especially, we do have JP Morgan's report that has given a target price of 555, and therefore we do see a 5% uptake. Let's quickly go across to our other guest on the show. Rajesh Palbia is with us from Axis Securities. Warm welcome, Rajesh. What are you looking at in this current market?
Good morning, Sakshi. Good morning, everyone. So, looking at the market, yes, we do have bullish view for the market, and the way now Nifty is holding about 22,250, 200 zone. I think that level needs to act as a good support area as we have a weekly option expiry. I think short covering can take Nifty further higher to 22,350 to 22,380 kind of zone during the day itself. So I think those who have already bought at lower level, they can hold on the position, trail your stop loss at 22,250 on Nifty spot. And even on the Bank Nifty also, the way Bank Nifty is moving up and now negotiating with the major call concentration area of 48,000. So I think once we able to take out above 48,000, I think here also we can see a good short covering action, then possible really can extend towards 48,200 for the intraday perspective. So I think both indices are looking promising at this moment. One should remain on the long side of trade. Some of the stocks where we are focusing at this moment from banking space, I think ICICI Bank is looking very promising. I think this stock can exhibit good amount of rally. A possible upside target for ICICI Bank we can see towards 1155 to 1160. ICICI Bank is buy with stop loss of 1120. The second stock that we like is Havells. The way stock is now trading near to its all-time high trajectory, I think this stock can continue furthermore upside. We are projecting target towards 1800 to 1820 for Havells. So Havells is a buy with stop loss of 1735. And the third stock is from automobile, that is Ashok Leyland. This stock is one can look to buy for positional perspective. We believe that in this series Ashok Leyland can exhibit good amount of rally towards 215 to 220. So Ashok Leyland is buy with stop loss of 198.
Okay. Good morning, Rajesh Bhai, and what a pleasure to host you. A very warm welcome. Let's hope this Thursday's weekly expiry on the Nifty spells doom for bears, and that's how we've started, ladies and gentlemen. The gap up has accelerated now, 125 points higher on the Nifty, 22,326. I am repeatedly telling you there is a lot of possibility that this week or later, probably next week, somewhere by 25th of May, you will see a record high in the markets, and all signs are showing very, very good strength. Rajesh ji, the entire capital goods space, Timken record high, Power India record high, Siemens, Thermax, all of them clicking with very strong gains. Indigo 4300. In this capital goods space, is there anything that catches your fancy? At the same time, L&T is available near its 200-day DMA. Market at one stage, is a how should I say, a very bad allocator of short-term capital. Your view on this capital goods space?
I think the way capital goods stocks are moving up, I think the most of the short-term trader investor are chasing this space, and the way stocks are moving like Timken, Thermax, ABB, Siemens, all stocks are showing good traction in terms of buying. I think we have seen a very sharp run up in last couple of trading session for most of these stock. The strategy one can deploy at this moment is they can ride the rally, keep trailing their stop loss. Timken is looking very promising, and the way stock has broken out its previous swing high, we believe that this rally can extend towards 4500 level also. So I think that stock one can hold on and keep trailing stop loss now at 4090 kind of zone. Even ABB is looking very promising. The way stock is now sustaining above 8100, 8050 level. I think that stock can continue its upward momentum. Possible upside we can see towards 8400 kind of level also. I think L&T, yes, one can look this stock also. On the long term perspective, yes, stock is holding the ground, but yes, in near term there was some corrective move. I think this is again opportunity to buy L&T in this decline, and the way stock is recovering from last 3-4 trading session. I think one can buy this stock for positional perspective. Keep your stop loss at 3320, and I think on a positional perspective, this stock can continue furthermore pull back towards 3600. That's the 50-day moving average for the stock on the higher side. So I think yes, one can buy L&T also from this space. And rest other stocks, most of the stocks are enjoying all-time high trajectory. So there is no stoppage for the stocks like ABB, Siemens, Thermax, Timken, Cummins. All these stocks are doing good. So I think here also they can continue their trading positions. But L&T for short-term investment is looking attractive.
Right. I think it's going to be an IT day, Sakshi. It's absolute blowout. We track 16 IT companies for you in the FNO zone, and they are showing very, very strong moves. Let's look at the high beta within them. Tech Mahindra 2.3% higher, and this is accompanied by about a 1% uptick in open interest. Oracle Finance, remember these are all very high beta counters. 79.60 open interest is up. L&T Technology Services, this is also gaining about 1.6%. I am actually looking at an IT company where we see a decline in open interest, and that, ladies and gentlemen, is Coforge and HCL Tech. It essentially means that bears are cutting their positions on these two counters. Rajesh ji, your pick between HCL Tech and Coforge, what would you prefer?
I think I'll go with Coforge. The way stock has shown run up in last 3-4 trading session, and those who were stuck in the stock, now they are exiting. So I think weaker hands are exiting from the position, and I think this is the right way to play the market when you see the stock prices are moving up and then open interests are trimming down, and whole market is in bullish trajectory. So I think here is the opportunity. The stock is filling now bearish gap which was formed in the earlier part of the May series. So I think Coforge can be a buy with stop loss of 4600. Upside target what we can see in this up move towards 4850 to 5000 also. So I think Coforge one can look to buy, but those who wants to buy some stock for from IT Pack for investment perspective, HCL Tech is also looking promising, but again we will wait for 1380 to cross. That level is very important on the higher side for HCL Tech. If it's able to take out 1380, then these really can extend to 1450 also. But Coforge, I think in these two stocks, I think I'll go with the Coforge.
Okay, Mr. Palvia, some other mid-cap names that are buzzing. Titagarh Rail, would you have a view? 7% higher right now. This is after the consolidated earnings showed an uptick on both the profitability and the revenue figures.
I think most of the railway stocks have done well in last couple of trading session. The way most of the railway stocks have recovered from their recent swing low. I think Titagarh, yes, one can continue on the long side of trade. The long-term trend is bullish. Buy on dip should be your strategy for this stock. The way stock is holding the ground on the long-term chart, we expect going forward, this stock can exhibit good amount of rally towards 1400, 1500 kind of zone also. So I think buy on dip should be your strategy to buy an equivalent Titagarh wagon. On the downside, your stop loss should be placed at around 1050. Any minor dip should be used as a buying opportunity in this stock.
Okay, understood. So that's as far as the railway pack is concerned. How are you looking into the move in Apollo Tyres, sir? That's also among the top movers in the F&O space, and this is again after the earnings and brokerage houses report actually being bullish on the stock right now. Anything else also apart from this, in case you can highlight in the tire space, sir?
I think yes, Apollo Tyre is looking promising, and the way stock is holding about 50-day, 20-day moving average, and the kind of recovery which we have seen from its multiple support area, I think this really can extend towards 515, 520. That leads to watch closely. Those who have already bought at lower level can book some partial profit around 520 level. That's the major challenging level for the stock on the higher side. At this moment, yes, one can hold long position. Stop loss should be at 496 to buy and hold Apollo Tyre. Even from this space, I think one can look for Balakrishna Industry also. That stock is also looking very promising. BKT is also showing good traction. Stock has already given a breakout of its multiple supply zone. The way stock is holding above all its important moving average, I think Balakrishna Industry can also continue furthermore upside. 2600 to 2650 could be the possible target on the higher side. So BKT is also buy with stop loss of 2490.
Sakshi, it is for this day that a list was prepared of 11 tire companies. As they say, prior preparation prevents poor performance. And all 11 are up. You've mentioned Apollo. Let's look at JK Tires, 2.3% higher at 399. The reason why I mentioned JK Tires is still the top line is more than market capitalization. In this rare instance where in a roaring bull market you have a very profitable company whose market capitalization is still below its sales. Nevertheless, this will sort itself out. What is also clicking in the green is TVS Sri Chakra tires, about 0.5% higher. You have CEAT 1.5% higher, and of course the likes of MRF 0.5% higher, and Goodyear 1% higher, 1178. Taking it away are PFC and REC. As usual, these two stocks have been the darlings of positional traders. PFC running post numbers, and REC also numbers for the fourth quarter were very, very heartening. The charts, Rajesh ji, what are they telling you for PFC and REC?
I think yes, REC is looking very promising. The way stock has moved up from its recent swing low, I think stock is now moving towards 550 kind of zone. So I think those who have already bought and wants to buy at current level also, they can initiate long trade. Keep your stop loss at around 527. Hold your long position for PFC, REC, and even for PFC also. Yes, this stock is also looking promising. The way stock is holding about 20-day moving average, we believe that this rally can extend to 455 to 460. So PFC is also buy with stop loss of 438.
Okay. The other point, ladies and gentlemen, that needs to be mentioned is the entire Kirloskar group. There are 7 listed entities. I'll go through them one by one. The reason why I mention this is that this is the 50th year of the group in being set up, and they have been fabulous outperformers as far as prices are concerned. Let's look at Kirloskar Pneumatic. It's done phenomenally well over the last 5-7 trading sessions. I'll bring the prices for you right there in front of you. Let's look at Kirloskar Pneumatic. Let's look at Kirloskar oil engines. Let's look at Kirloskar Industries, Kirloskar Electric. All these companies have done phenomenal wealth in the last about a month or so, and of course over the last 2-3 years. Very, very strong move coming into all of them, especially Kirloskar Pneumatic over the last 2 or 3 trading sessions. Rajesh ji, anything that catches your fancy? There's a mild downtick on the Nifty. It's corrected from 22,320 to 22,260. Nothing to be worried about. It's the gap that it's trying to fill, and this is a positive. Rajesh ji, anything that catches your fancy?
I think this gap should be used as a buying opportunity. The way Nifty is corrected from the recent the intraday swing high, I think 22,200 to 22,250 is the zone where again Nifty will try to get some support buying action. So I think this dip below 22,250 should be used as a buying opportunity. I think one can focus on a call option of 22,250 strike only. That call option can give a good return during the day itself. As you discussed about the Kirloskar group stocks, so I think Kirloskar Electric, that stock we are tracking, and the way stock has managed to give breakout, we believe that this KECL, Kirloskar Electric, can continue for the more upside, and then possible target in near term to short term we can see towards 200 to 210 also. So this stock is also looking very promising at this moment. And for Nifty 22,250 call option, we are focusing at this moment. And I think one can buy this call option even for intraday perspective also. You can focus. It's trading at around 65 rupees. So if you get chance to buy this stock around 58 to 55 range, that's the attractive level again to buy this call option. Keep your stop loss at around 35 rupees, and possible target during the day itself we can see towards 95 to 105.
Okay, understood that. Some of the other stocks that are moving again sharply higher. Bharti Airtel among the Nifty stocks, 2% now up in trade at 1338 after the earnings and the brokerage houses reports giving a bullish view of 1500 kind of targets coming in on left from JP Morgan especially. Rajesh, do you see this stock positively as far as the charts are concerned?
Yeah, very strong buying action in last couple of months in the stock, and the way stock is holding the ground in this volatile market. Also, stock is now trading near to its all-time high trajectory. We believe that yes, Bharti Airtel is a stock where one should keep in their long-term portfolio. Also, series of high top, higher bottom formation is taking place. Stock is moving in the upsloping channel on a weekly as well as on the monthly chart. So our view is bullish for Bharti Airtel. We are projecting target towards 1400 to 1440 in the continuation of this up move. So Bharti Airtel is buy with stop loss of 1300.
Okay, so that's positive view coming in on Bharti Airtel. The other stock that I want to discuss is from the Adani group of stocks that have been continuously in focus over the last few trading sessions, all of them showing momentum. Adani Ports especially, where Jeffries has given a bullish view, 1640 kind of targets. How are you viewing Adani Ports? Is it looking positive on charts?
So those who wants to buy Adani Port for longer term perspective, yes, one can buy and hold the stock. For near term trading perspective, some challenges are there on the higher side. The immediate supply zone is placed at around 1380. If stock crosses those levels, then this rally can extend. But time being 1380 needs to be watched closely, as again we are seeing some pressure in some profit taking is happening in Adani Group stocks. So Adani Port, yes, in decline you can buy. The attractive level on the downside is at around 1335, 1340 zone. That level is very important on the downside for near term trading perspective. So if you get opportunity around those level, you can buy with stop loss of 1320. And once the stock crosses about 1380, possible target we can see towards 1440 also.
Okay, ladies and gentlemen, there's no stopping PFC, and the other counter that's joined in the rally is Hindustan Aeronautics. Remember, it's the earnings boy for today. The rally is for the fourth day, record high. I am marking the stock, not taking a technical view because we are ahead of an event, and of course, for the moment, the charts look overstretched. Take it from me that earnings will be phenomenal. Okay. Now let's again look at the broader sentiment. The Nifty IT, ladies and gentlemen, index has gained further ground. We have a 1.2% uptick on this one, 33,534 as far as the index is concerned, still below 10 EMA, still below 200 EMA. This is where the value zone of the market is lying, and at 2:50 p.m. today we will be discussing how to benefit from that. If HAL is up, that essentially means that the entire defense chain is doing phenomenally well. You have a green tick on BEL. Let me just get you the percentage rises. These are modest upticks, but they are all in the green. BEL 1.4% higher, 236.20. Cochin Shipyard 1.3% higher, 1348. You have BDL 1% higher, that's Bharat Dynamics, 2020, and of course there is absolutely, Sakshi, no stopping Bharti Airtel, 2.6% higher, 1350. I think we are going to see a fresh record high on Bharti Airtel very soon. I think you've pointed out a research report from Mercury, and yesterday's con call talked about relooking the guidance 3 to 5 months later, and of course the overall capex for 5G and 4G will now moderate from now on, and they are also looking at reducing debt at the moment. We've already discussed Bharti Airtel once, but there is absolutely no harm in pointing a good stock again. Let me just find out what is the all-time high of Bharti. It should be 1450 or something if I remember correctly. No, all-time high of Bharti is going to happen today, ladies and gentlemen. It is yes, the all-time high is somewhere like 1354 and the counter is at 1349. So maybe 1 hour from now you will see a very strong move coming into Bharti. As it is, the volume is pretty good, and this comes after earnings, after con call, and remember the fourth quarter earnings were below expectations from the market. Rajesh ji, anything that catches your eye which we may have missed?
I think Shelchi, Coal India is also looking promising. I think this stock one should keep eye. The way Coal India is moving up, we believe that this stock can exhibit further more upside. Possible target for Coal India on the high side we can see towards 485 to 490 also. So that stock one can keep eye with stop loss of 462. And I think some profit taking is happening, but from mid cap space, I think one interesting stock that we are focusing, and we have already recommended this stock to our clients also, that is Ahluwalia contract. That stock is also looking very promising, and the way stock is holding the ground, we expect on a positional perspective, one can look to buy this stock. Possible upside target 1220 to 1250, we can see in short period of time. So that stock is also looking promising. Keep your stop loss at around 1130. And Shelji, one more stock that has corrected post earning, that is Zomato. That this stock is also looking promising. The way stock has, after the correction, stock has formed a base at around 185 to 188 zone, and I think the way stock is recovering now, we believe that Zomato can also recover towards 205 to 210. So for positional perspective, Zomato is also one stock where we are focusing with stop loss of 187. Upside target we are projecting towards 205 to 210.
Okay. The other one wanted to ask you is from the auto space. You had mentioned Ashok Leyland, but I want to ask you on this two-wheeler maker, Hero Moto. There is no let up again. A record high being seen today. It's trading at 5121 right now. It touched a high of 5128, 1.3% higher for this one. Would you still be positive on the trade?
Yeah, the way open interest is there in this most of the automobile stocks, long built up is there. We believe that Hero Motor can continue furthermore upside. The way stock managed to give breakout of its Fab 2024 swing high, I think these rally can extend. 5,400 could be the possible target in coming trading session. So on a positional perspective, yes, our view is bullish. Keep buying this stock in minor dips. Your stop loss should be placed at around 5,065 to hold a position. On the higher side, we are projecting 5,400 as a target.
5,400 is the target for Hero MotoCorp. Positional trades can be taken on this auto counter, and there is no let up in the kind of move that we are seeing here. I'll ask you on Oberoi Realty also, sir, from the real estate space. Again, it's on the momentum in F&O space again. How are you looking at the counter?
Definitely, one can buy this stock. Overall structure for most of the real estate stocks are on the bullish side. Some corrective move was there in recent past, but again, Oberoi Realty, the way stock has moved up and now again back to the all-time high trajectory. Yes, here we can see furthermore outperformance. Possible target towards 1750 we can see in coming trading sessions. So Oberoi Realty is also buy on dip should be your strategy. Keep your stop loss at around 1620.
Okay, ladies and gentlemen, 9:45. We've had the first half an hour of trade. Let's now take a market check. The Nifty for the moment is muted, and it has to be because we are at the weekly expiry today. Still in the green, 22,245. Remember, the high has been 22,320. So these are intraday pressures. At 22,300, you have a very, very strong resistance, not only on the options charts, but also on the technical charts. The 21 EMA refusing to sort of part way for Nifty bulls. What are the stocks within the Nifty that are helping the index on its way up? Let's look at them. The primarily one is of course Bharti Airtel, a record high here, and out of the 44 points of the Nifty, 25 come from Bharti Airtel and 23 come from Infosys. You were on top of both these trades before markets opened. ICICI Bank 6 points to Nifty's green tick. ONGC is something that you need to look at. Remember, a cut in the windfall tax is very, very beneficial for one of India's most profitable companies and India's top explorer. Rajesh ji will examine the chart and we'll go to him for ONGC shortly. Okay, what's pulling the index lower? Nothing to be worried about. Maruti and Tata Motors, this is just mild profit booking. L&T is giving, ladies and gentlemen, an opportunity of a lifetime to add to your long-term portfolio. We will just take Rajesh Palvia's view on this one, but a sip on L&T today will pay you very, very rich dividends 1 year down the line. ITC, of course, down 0.5%, 426. Let's look at the fresh highs in the Nifty. Bharti Airtel, Hero Motors, Hindalco and M&M. Remember, M&M is moving ahead of earnings. We will not be taking a call on that one because that is event led. Okay, now more interesting things I want to show you is the most active counter on NSE 500 is surprise Tata Motors, followed by Power Finance Corporation. So the market, ladies and gentlemen, is in fine shape. The Nifty, I believe, will show some bout of short covering today, and as I have always been mentioning for a while, tighten your seat belts. A record high is on the way. What else is clicking? A record high, Sakshi, on HUDCO. This is something which we've missed, but how many things can you track at one point of time? Ahead of earnings, Container Corporation of India is moving 1041, and there is absolutely no stopping ABB 8267, fresh record high, 2% higher. I'm not going to take a call on this one because the rally is very sharp and it's very, very overstretched on the charts, but this is how the markets are at the moment, and this is how it is. Power Finance Corporation taking it away. Remember, now this is a tailwind of very strong earnings, brokerage upgrades, and I believe a record high at 453.95. Rajesh ji, ONGC, Power Finance Corporation to you. First, PFC.
Definitely, PFC is a buy. The way stock is trading above its near-term moving averages, I think we have already discussed REC PFC, and we are holding a bullish view for both the stock. And for Power Finance, we are projecting target towards 460 for trading perspective. Even those who wants to hold for positional perspective, they can hold on the stock. 475 to 480 could be the possible target on a positional perspective. The way the stock has consolidated and given the breakout on the daily as well as on the weekly chart, we believe that one should trail their stop loss at 440. 460 is the first target. Second target is 475. ONGC is also looking promising. Again, now stock is regaining its strength, and now stock is trading about 20-day moving average. On the near-term perspective, also stock is now gaining the strength. I think one can buy and accumulate this stock with stop loss of 272, upside target 285 to 290. We can see in short period of time for ONGC. So I think ONGC is also buy at this juncture for near-term trading perspective.
Okay, understood. So that's the view coming in on both ONGC as well as PFC as well. Metals Pack is also seeing some momentum build up again, and especially it's Hindalco that continues its upward rally for the fourth trading session. Tata Steel along with it moves higher in trade. Anything in the Metals Pack that looks positive to you, Rajesh ji?
So I think for positional trader, Vedanta is our preferred choice. I think these stock one can hold on. Even any dip should be used as a buying opportunity for Vedanta. The way stock has given a breakout on longer term time frame, we believe that this stock has potential to surpass 500 level also in positional perspective. So Vedanta is our preferred choice. Buy on dip should be a strategy at this moment. One should keep accumulating this stock. Keep your stop loss at around 422. Upside target 500 on a positional perspective. For trading point of view, 455 to 460 is the trading target. For traders, the stop loss should be at around 434. Even from metal space, as you pointed out, Hindalco, yes, that stock is also looking promising. And the way stock is moving up, the series of high top, higher bottom formation is taken place. I think this stock is also moving and penetrating its previous swing high of 2022, which was now it's already crossed those levels. So I think the way stock has given a breakout on longer term time frame also, Hindalco is also buy. Upside target we can see towards 690 to 700. Keep your stop loss at around 638. Even from a metal space, one can look to buy Jindal Steel and Power. That stock is also looking promising. The way stock is now in moved up and now it's in 4-digit. I think Jindal Steel and Power can also exhibit good amount of rally. Stock is trading above all its important moving averages. This is the very strong breakout on the weekly chart. We believe that this rally can extend to 1040 to 1050. So most of the metal stocks are looking promising. I think at this juncture, buy on dip should be your strategy for most of the metal pack at this moment.
Okay, so that's the metal view coming in for you. The oil and gas space is further taking some momentum apart from ONGC. Now it's Oil India also that's picking up pace, about 4% higher for this one. And you're also seeing the OMC space, also IOC and the likes are also jumping up higher in trade. Anything else also in the upstream companies of oil and gas that look positive to you apart from ONGC, sir?
I think BPCL is one stock where we are focusing. The way stock has moved up and the stock is already holding the ground. Breakout level is already sustained by the stock. So I think BPCL has the potential to move up. 645 to 650 could be the possible target on BPCL. We can see in a near-term perspective. So one can buy this stock with stop loss of 615 and GAIL. GAIL is also looking promising. Stock managed to give breakout of its falling channel on a daily chart, and stock is now negotiating with its 20-day moving average. So GAIL can exhibit upward momentum. We can see target towards 210 to 212. GAIL is buy with stop loss of 197.
Okay, the entire capital goods space is abuzz with gains. There are so many stocks I want to mark, but I am holding myself back because we've discussed them many times. Okay, SKF India. This is 5424, 1.8% higher. Why am I marking this? Because 15 days ago we had Ashish Chaturmota on our show, and he had mentioned that the entire bearing space will be in strong momentum. So he had purchased Schaeffler for himself and SKF India, and these two have undoubtedly gained, but what has gained even more dramatically is Timken India. So record high on Timken. I think this is not only a day but a week for the entire cap goods space. We'll start with Kirloskar Brothers, 11% higher, 1872. Needless to say, a fresh high. NCC, this is something that we need to discuss, sir. Sakshi, I think this is an earnings-led theme. This is National Construction Nagarjuna Construction Company, 6.5% higher, 267. We'll get Rajesh Palviya Saab on this one. Rajesh ji, what are the NCC charts telling you?
Very strong momentum is taking place in this stock. The way stock managed to give breakout of its 2008, it's a multi-year breakout is already registered in this stock. The way stock has managed to give breakout on longer term time frame, we believe that now till stock is holding about 45 to 50 zone, the trend is likely to remain on the bullish side. Any dip should be used as a buying opportunity. Your positional stop loss should be at 245. Upside potential for the stock is around 300 to 320 also. But yes, those who wants to buy for positional perspective, they can buy and accumulate this stock.
Okay, this is a very interesting thing that Rajesh ji has mentioned. We'll do a very, very long-term chart of NCC. This price of 266 is just mildly higher than the all-time high that was seen in Jan 2008. So 2008 essentially means 12 plus 4. It's a 16-year breakout on NCC, driven by a very strong set of numbers that has come in. So do keep NCC in mind. For the last, 1, 2, 3, 4, 5, 6, 7, 8 successive months, NCC has moved from 54 rupees, ladies and gentlemen, on 1st July 2022 to what we are here. So it's a higher high and higher low that the counter is making, and has also taken out its all-time high. So these are very, very interesting times. Sakshi, Thermax fresh record high 52.38, Policy Bazaar 1% higher, 1284. And of course, you have a very strong move coming in Zomato. I think Zomato will reclaim 200 fairly shortly. What are you watching?
Again, a lot of these diagnostic firms that are again picking up pace, and I wanted to take Rajesh ji's view here. Apart from Metropolis that I mentioned, which is buzzing in the F&O space, Dr. Lal Labs is showing up some higher ticks again in trade. We've seen time and again Divis come back in action. How are you looking at this entire space? Does it warrant any traders' attention in this momentum?
Yes, some buying interest is taken place in most of this diagnostic company. Metropolis is the way stock is forming the rounding bottom formation on the weekly chart. We believe that once the stock manages to take out about 1950 2000 zone, then there could be a very sharp up move we can see. So those who want to buy and accumulate this stock, I think Metropolis is looking very attractive. Risk to reward is in favor. Your stop loss for positional perspective should be placed at around 1800 to buy and accumulate Metropolis. Lal Path Lab, if we analyze the near term structure, yes, there is a breakout on the near term chart. Stock is holding the ground. We believe that if Lal Path Lab continues to hold about 2500, 24 zone, there is a high possibility that stock may scale up to the next target towards 2630. That's the level where we can see Lal Path Lab to continue for the more upside. So I think yes, Lal Path Lab is also buy with the stop loss of 2490.
Okay, one more stock that I will mention from the broadest index, Nifty 500, Somani Ceramics came on the radar. It came out with the earnings and the stock is sharply higher in trade today. So let me just pull out the earnings for all our viewers also. And in the meanwhile, I'll request Rajesh ji to quickly check the charts of Somani Ceramics and also tell us if there is anything positive that he looks at over here. Now, as far as the results are concerned, we have seen a total income of 679 odd crores, an uptick of 9% year on year, 42 crore rupees of an operating profit, which is improved by 77 odd percent, 24 crore rupees of a profit after tax, 100% uptick, and the margins at 6.2% as well. Looks positive to you, Rajesh ji? Would you track this?
Stock has shown up move, and on the weekly chart also there is a up move is taken place. The way stock has opened with a positive gap, now stock is approaching to its previous swing high of 740. That's the important level on this on the higher side. So I think those who have already bought can try to book some profit around 740. If at all stock crosses those levels, then some more upside we can see towards 800 also. But I think looking at the near term, short term structure, some supply zone is likely to be there around 740 zone. So those who have already bought can use this up move to book some profit around 740.
Okay, ladies and gentlemen, we are now at 10. We'll wrap this up very quickly. The Nifty is in the green. It's the weekly expiry today. Therefore, you see this muted trade, but action is going to hot up post 2 p.m. A lot of short covering is due. Let's hope that we end in the green today. It's a blowout on the Nifty IT index. Remember, it started about 80-90 points higher. It's gaining momentum. 400 points up, 35,523. The mood across the capital goods space is unbelievably bullish. I am trying to search my memory as to last time when did I see these kind of rallies. It was only in the dot-com bubble when IT used to move like this, but record highs on ABB, on Siemens, on Thermax, the entire Kirloskar group, stocks such as Kirloskar Pneumatic, Kirloskar Brothers, Kirloskar Electric, which Rajesh ji has also picked out. Very, very strong move coming in onto Bharti Airtel. We are looking for a fresh high, and there it is, 1356. This has legs and this has momentum. And of course, across the board, you see rallies in the PSU favorites, Power Finance Corporation post earnings, REC again post earnings and post correction, a record high on HUDCO, and stocks such as Hindustan Zinc are also showing small amounts of demand coming in. Earnings boy, Dixon doing very well. Ahead of earnings, you have a smart move coming into Hindustan Aeronautics, and surprise, surprise, you have a very, very decent uptick happening on Emphasis, and of course the erstwhile market favorite SGVN. Sakshi, this is what I am watching. What's on your plate?
I think we'll wrap it up at that. It's 10:02 now, and we will continue to track the markets going forward from here as well on our various other shows. Well, thank you so much, Rajesh ji, for being with us on this special edition. And the Nifty is trading at 22,228, 28 points higher in trade right now. And of course, all across the board, you do see, indices rallying. I think barring the pharma index and probably the FMCG and the auto space. Rest of the sectors are looking up. It's the IT space that's in the front foot, 1% higher in trade. Realty also a percent up. Apart from this, PSU banks are 0.5% higher. Metals is 0.6% up in trade as well. You have financial services that are doing well, and the Nifty Bank is 0.25% higher in trade too. As far as the mid and the small caps are concerned, 0.6% increase for the mid cap 100 index. The small caps are up by 0.5% as well. Top movers on the Nifty: Bharti Airtel, HCL Technologies, LTI Mindtree, Tech Mahindra and Infosys. So 4 out of the top 5 names from the IT pack that are pulling up the Nifty show. As far as the down ticks are concerned, it's Maruti that's dragging by 1.7%, Shriram Finance is down 1.5%, Divi's Laboratories, Bajaj Auto, Cipla, Adani Enterprises are the ones that are seen declining in trade. F&O space, clearly you have Oberoi Realty, Apollo Tyres, Emphasis, PFC, Bharti Airtel. All 5 of these stocks we've discussed with our guests. So in case you missed that, you can go back and take their views on this one as well. With that, we wrap up this special trade. Many thanks for watching us, but do stay tuned as we will continue to get you all the action and all the buzz from the street on your screens.
Hello, Namaskar. You're watching BTTV. I'm Tanya Aneja. Well, the SIP inflows breached the 20,000 crore odd mark for the first time in April 2024. And according to the data from the Association of Mutual Funds,